Hey, what's going on, guys? This is Leo. I'm going to go ahead and dive in here with essentially my take profit strategy. It's the same strategy that I use on all of my trades as far as swing trading goes. And I'm going to explain the risks of not doing it. And let's go ahead and dive right in. So, it, the whole idea here is to essentially take a shotgun approach to the market, right? Because despite what anyone says, nobody knows how high it'll go. Nobody knows if it'll hit your target or not, right? So what you're doing is you're casting a wider net, and hopefully you get part of the trade. Best case scenario, you get all of it, and you do really well. So essentially what we're looking at here is, well, I guess let me show you this first, because I want you all to know this is a real world example. I'm not just making up numbers here. So this is a screenshot from my account. You can see there's my name, Leo, and then there's AMC Entertainment. I'm currently holding 5661 shares. So this is a real world example. So I will be taking off 5% of my position at $287. And the reason that I'm a little bit in front of it is that something can happen in trading where, well, first of all, markets, as a general rule, they don't like round numbers. And that's typically because people will have orders right at $300, and then they'll have them stacked just in front of it. And the reason that you want to be just in front of it is because you want to guarantee your fill. What you don't want to happen is, and this has happened to me a lot, and it's just part of trading, but price will continue running, and it will touch, because it has to trade through the price to guarantee a fill, but it will touch your target and then move off, and you don't get a fill. And the reason for that is, a lot of times what it is it's first in, first out. So whoever gets their orders in first, whenever the price gets there, those are the ones that are going to be filled first. So the way you work around that is, if you front run just a little bit, you're more likely to get your fill. So I'll be taking off 5% of my position here. And what that does is that puts me at a risk neutral. And that's very important at trading, because it takes off a lot of the stress, because my original investment, you could see here, was $58,000. So taking off 5% of my position gives me an $81,000 profit. So now I'm risk neutral. I've recouped my original investment, and I've made a little bit of profit. And then the rest of these would be my runners. So I'll take another 5% at 987, 279,000, 15% at 1897 for 1.6 million, 20% at 2897 for another 3.279 million, 25% of my position at 3897, which would give a $5.5 million profit. And then finally, my last one would be 30% at 4897 for an additional $8.3 million profit. Now, that would give me a total profit of $19 million on this trade, assuming that all of these go through. Now, I'm not saying for you to necessarily take these exact price targets that I'm using. Choose whatever price targets you want. Most important thing for me to say in this video is that this is reducing your risk, because nobody knows how high it's going to go. As price climbs higher, you get exponentially, your risk to reward gets really skewed, right? So let's say that you were just targeting $5,000. So price is running, and you haven't taken any profit yet. And you're targeting that $5,000, and you're going to do an all in, all out approach. So meaning that hits 5,000, you close your trade. The problem with that is that what happens if it goes to 4,500, and then it starts turning down, and it just keeps going down. Now you haven't taken any profits. You got really close to your target, and now it's moving away. Now you feel sick to your stomach, because you had all of this money in your account, right? Because if you took profit at 5,000, you'd have 28 million, right? In this same scenario, or I would. But now it's moving away, right? So that's the problem with an all in, all out approach. Also, your risk, let's say you want it to go to $10,000, right? So now you're at 5,000, right? And You haven't taken any profits. And now you're risking the 28 million you already have to gain an additional 28 million. Okay, so what are the odds that it's going to go another $5,000? You know, the whole premise of the trade to begin with is that, you can make a small investment and see exponentially large return. But whenever you get up there and you haven't taken any profits, right? So now your unrealized profit and loss of 30 million, all of that's at risk because you haven't taken any profits yet. You haven't locked in your original investment. You haven't actually gained anything. So, it's a big problem. It's not to mention the psychological stress that it puts on a trader having made so much money and not been able to take any profit. So, taking a shotgun approach, I believe, is best. Casts a wider net. You're able to breathe. You're able to not have as much stress. Now, something else that you can do. So, what's important here is take a look at the percentages, right? So, you got 5, and you can combine these. You can do 10, 15, 20, 25, 30. But what you can do if you want to reduce your risk even further is that in between each of these brackets, you could take those same percentages and put them in between there, right? So, let's say between $300 and $1,000, right? You take those bracket breakdowns and you start stacking them going up to your $1,000 target. So that 800 the 282 shares would be broken up in those percentages leading up to the $1,000 target, right? So now you have even smaller bracket to hit your larger bracket, right? So you don't have to, hit the bullseye, It's like throwing a dart at a dartboard and you have to hit the bullseye in order to win. Well, just pull up your shotgun and shoot the board, you're going to hit it, That's what I like about this approach. I think that's pretty much it. There's really not a whole lot else to talk about as far as the strategy goes. I just wanted to lay this out there. Again, I'm not here to argue about targets and how high it can go. This is just what I'm willing to risk on the trade. This profit, I am extremely happy with, and I'm not willing to risk $20 million to hope that it goes to 10,000 or 15,000 or 20,000, because the higher it goes, the more risky it becomes, the more unknowns. Are they going to run out of money? A lot of people in the trade like to pretend like there's an infinite amount of money out there to buy back these shares, but there simply isn't. It's it's $19 million. That's a lot of money, and I'm happy with it. So until next time, I'll talk to y'all later.